All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today I want to take you through a portfolio I don't normally share on this channel, and that's actually my TFSA. It's very tiny, but what I want to do today is I want to mark out some major moves that I've made, which will help propel this account going forward. I want to talk about why I'm making these changes, where I have switched out of SCHD, sold out in my TFSA, and I'm currently buying three different ETFs. And so what I want to do in this video is I actually want to go over these three ETFs, why I'm buying them, and as well, what exactly do they hold and what could be in store for the future of these ETFs, which by the looks of it is going to be long sustainable growth, which I think is very cool. And this all ties back to our main principle, why we, first of all, invested in yield max ETFs at the beginning, and it's to get that cash flow in order to buy great and sustainable, whether it's index funds, ETFs, or individual stocks. I like a mix of both. I love the simplicity of buying an index or an ETF where you know it's just going to be stable and rise and pay a good dividend yield, but they're not super exciting. That's why I also like to put money into smaller companies, which I'm definitely doing, and it's causing me to lose some hair. Just kidding. But a little bit of stress with that, but that is totally okay. I like to stress. Stress can be good for you. So today we're currently up to 8,538 subscribers, 60 subscribers in the past 28 days, which is not too bad. So let's get into this video today. So I want to start off by saying, within my TFSA, because I don't really show it too much, I want to talk a little bit about the return so far. They're pretty good. So I deposited a total of $715, as you can see right here. My total return on this is 32%. This majority came from an investment I made within CNDU.TO. This was kind of in April. I invested about $700 into CNDU.TO, and it climbed up to a total of about $900 or so, which is fantastic. CNDU.TO is a 2x bull on the TSX 60, kind of like the 60 biggest companies within the Canadian stock market, or within like Canadian stocks themselves. So that was awesome, and really it's more of a riskier play, but I felt that when markets drop, there's a little bit less risk when you enter them, just because obviously the lower the price for an overall index or an ETF, I feel in the long term, if you believe in that country and those companies, it's going to do better, and the stock price will likely increase. So that's why I bought. And so for that, I was up about maybe 25% or so. Then what I did was I purchased SCHD, which got me up a couple more percent. If I can actually move mine up here so you can see. And I sold SCHD today. And I'm going to tell you why. I sold 25 shares at $27.34. And the reason being is because I live in Canada and I have a TFSA. And when I'm buying American companies, for example, I'm paying tax on SCHD's returns and the dividends. But when I'm buying Canadian ETFs, like the three that I bought today, I'm not going to be paying tax on any income or when I sell those shares. So that's the main reason. There's no point in holding something where I'm going to get taxed on my TFSA. It's a waste. So I sold out of SCHD and I bought these three ETFs today. So what did I buy? I bought, first of all, VDY.TO, the Vanguard FTSE Canadian High Yield Dividend Index ETF. And two of these ETFs are going to be a little bit similar, but I'll kind of tell you why I bought each of them today. Basically, why I bought VDY, overall returns over the past year up 18%. We can compare that to the S&P 500, which is the US, 500 biggest companies in the US, up 20%. So it's very respectable, and also paying a 3% dividend yield too, roughly almost 4%. So what does VDY.TO hold? I think Yahoo Finance does a fantastic job of going through exactly what they hold. Their majority, I'm going to bring myself down here. Look at this, like an elevator. Boom. Awesome. Basically, financials, they are a majority holder in financials, 54%, and energy. This makes up roughly about 80% of the total fund. And then you could see they have a small percentage in utilities, communications, basic communication services, but it's really minor. The main is financials and energy. And for Canada, from what I've learned, I don't have much history with Canadian ETFs. But what I've been told and what I've learned, and from what I can see, it seems very heavy on the bank side. So we have Royal Bank of Canada coming in at 14% of the total assets. We have TD, which is a huge bank in Canada, Toronto Dominion Bank, Enbridge, a gas company, Bank of Montreal, Bank of Nova Scotia, Imperial Bank of Commerce, Manulife Financial Corporation. So a bunch of financial services and banks within there, a couple of utilities as well, and energy. But that's kind of the makeup of this fund. Very respectable over the long term. We look at 5 years, 82%. We look at all time back to 2012. We're looking at 125% return. Not bad. Fair. Within this fund, if we scroll down here, I'm pretty sure there is 58 total stocks within it. And with that, we shall move to the next one. The next one that I bought was XEI.TO. But before actually we do that, VDY.TO, let me disclose how many shares I bought. So VDY.TO right here, I bought 7 shares at $55.52, currently up about 6% on 7 shares. 6 cents on 7 shares, so we're getting rich, I guess. That's awesome. Up 0.10%, so very minor. But that's okay, because it's an ETF. We'll hold it for the long term. We'll go from there. The next one that I bought was XEI. XEI, like VDY, is also kind of heavy in the financial and energy space. They're a little bit heavier within the energy space, which I like, but they're very similar in my opinion. Right now, for a 1 year kind of total, they're up about 14.5%, which is not bad. They pay a slightly bigger dividend, so you could say they're more towards income at 5.29%. And my screen here, I think, froze for that, but that's okay. Their biggest holding, and I like this because they're a little bit better weighted, although they're still heavy into financials and energy, like VDY.TO. They're a little bit better weighted, in my opinion, with the overall holdings of the underlying stocks. TD coming in the biggest holding at 5.12%. You have Suncor Energy, once again, Royal Bank of Canada, Enbridge, Canadian National Services Resources Limited, Nutrient. So a couple different faces within here, but I like that they're a little bit better weighted. And this one is from BlackRock. The other one was from Vanguard. When we go here, let me see if I can find our total holdings. I'm not necessarily sure. It shows their top 10, but within that, I'm not sure if we're going to see all of the holdings within here. But as for an eye, they are very similar in my opinion, VDY and XEI. Now, the last one that I bought today is going to be XIC.TO, and this is the most diversified ETF. And really, actually, I don't have his channel up, but I want to give a shout out to the Canadian in a t-shirt, because I watched this video and he was some of my inspiration in order for actually purchasing these ETFs. I thought they were fantastic, and I was looking at these 3 myself, and so I made the jump today because of him. But XIC is fantastically diversified. If you look here, sure, financials at 32%, that's pretty heavy, but then you go down the basis energy, 16%, basic materials, 12%, industrial 12%, technology 10%, 4%. So this is probably one of the best Canadian ETFs you're going to get in terms of diversity. It produced last year 27% return. That's fantastic. That's even better than the S&P 500, and it pays a 2.5% dividend. So that's what I like to see. You can see here, once again, Royal Bank of Canada. This seems to be a popular one. Shopify is a new one in there. Enbridge. We've seen Brookfield Corporation. Cool. So there's a couple companies that I don't necessarily know under here. But for the majority, I view them to be very safe. Even ones like Shopify, individual stocks. But all in all, very well diversified ETFs in my opinion. Of course, XEI coming at the top of that, and I bought 7 shares of each. I split roughly about 389. You could see here my weightings. VDY is the one that I'm heaviest in, but for the most part, I try to split about $200 to $300 Canadian between these 3 ETFs. I only have $1,000 in my TFSA, so very tiny when you compare it to the overall size of my account. But this just goes back to the principle. Pardon me, I'm gonna need some water soon. But it goes back to the principle where we're taking our yield max ETFs and we're buying great underlying indexes, companies, and businesses. This is so we have the cash flow accompanied with my overall job in order to build a stable base to which we could then buy great individual companies. Like in my perspective, I'm buying HIT, and that's what I'm buying heavy now, and I'll keep you guys updated on that. So I hope you guys enjoyed this video on these 3 different Canadian ETFs, ones that you could potentially buy for your own TFSAs if you are interested. If you guys did enjoy, we're up to 8,538 subscribers, so please do subscribe, and I hope to see you guys in the next video.